So this video is going to be a bit long, but trust me, you're going to want to stick around because you're going to learn something about US power. Now, before I get into that, new US sanctions have forced Russia's main financial market, the Moscow Exchange, to stop trading in US dollars and euros. Now, the announcement came quickly after the US introduced new sanctions aimed at cutting off money and supplies to Russia to stop its war in Ukraine. Now, the Moscow Exchange and the central bank made the announcement on Wednesday, which was actually a public holiday in Russia because it's Russia Day. Now, the central bank said because of the new US sanctions against the Moscow Exchange Group, trading and settlements in US dollars and euros are suspended. This means that banks, companies, and investors can't trade in the euro and the dollar on the central exchange anymore. Instead, they will have to trade directly with each other, which is less efficient, and I'll talk about this more. The U.S. Treasury said it was targeting the structure of Russia's financial system, which has been changed to support its defense industry and continue aggression against Ukraine. Now, the Moscow Exchange said that trading in shares and money market trades settled in dollars and euros would also stop. The sanctions are expected to reduce the exchange's profits by cutting trading volumes. Now, the investment banker and professor Yevgeny Kogan advised people to not panic. If they're scared, they run and buy currency, and he's saying he's not. But it doesn't seem to be working because there are now lines and people rushing to pull money out of their money market accounts because people are worried they're going to lose their investments. But what does this really mean? What did the US actually do here? Didn't the US ban the US dollar from Russia already? Well, not exactly. The US has imposed various sanctions on Russia since the annexation of Crimea in 2014. These sanctions targeted specific individuals, companies, and sectors of the Russian economy, including energy, defense, and finance. However, these sanctions did not completely ban Russia from using the US dollar for all transactions. They restricted certain types of transactions and financial activities, particularly those involving specific sanctioned entities, usually surrounding the war. After Russia invaded Ukraine in February of 2022, the U.S. ramped up restrictions on Russia's major banks by cutting them off from the SWIFT international payment system and freezing Russia's assets. The Russian central bank held abroad about $335 billion, and that's frozen. Now, this new round of sanctions specifically targets the Moscow Exchange and its ability to trade in US dollars and euros. Now, by suspending trading in these currencies on the Moscow Exchange, the new sanctions cut off a key avenue for banks, companies, and investors to access dollars and euros through a central and regulated platform. This leads to transaction problems as investors will find it harder to conduct transactions in dollars, and this obviously causes issues with imports that are priced in dollars. Now, the difficulty in obtaining dollars means Russian companies might struggle to pay for goods and services from abroad, which can disrupt supply chains and lead to shortages across Russia. But this is where it is particularly problematic, and this is what I mean when I talk about the US's power. International trade and debt repayments are typically settled in US dollars. This is called dollar-denominated debt, and it is a global beast that the US controls. And when I say beast, I mean beast. Now stay with me for this because you're going to learn something that is extremely important, and it is a big reason why the US is so powerful and will be for the next 100 years. Now, according to data from the Bank for International Settlements and other financial sources, there is approximately $15 trillion in dollar-denominated liabilities. These are held by global banks across hundreds of countries. There's an additional $16.7 trillion in external bank assets denominated in dollars. So that's $31 trillion, right? All of which is in dollar denominations. Still with me here? Well, how does this happen? Well, when China wants to buy a Japanese electronic, China writes Japan an IOU that promises to pay in dollars because Japan doesn't want yuan. They want dollars so they can trade with other countries that only trust the dollar, or they want to trade directly with the US, who only takes dollars. Now, no matter what the dollar supply actually is in reality, China just promised Japan that they would pay in dollars. So China is now on the hook to pay in dollars. So it needs to buy them, which it goes to an exchange to get. Why does Japan want it this way, or Australia or any other country want it this way? Well, because the dollar is stable and universal. The dollar is like Visa. Some currencies are like American Express, and then there's other currencies that are like Diners Club. Not everyone is accepted everywhere, and some are just not accepted anywhere. But that is not all. And again, pay attention because this is a significant driver of American power. A huge amount of dollar-denominated debt is not recorded on the balance sheets due to the use of foreign exchange swaps and other financial instruments that happen outside of the American purview. The Bank for International Settlements estimates that there's around $65 trillion in unrecorded dollar debt circulating through non-US banks and shadow banks funding everything from cartels to arms dealers to terror groups, etc. Those are the types of people that you have a vested interest in paying back because there ain't no bankruptcy there. And sorry, China, international cartels don't take you on. They take dollars. This means there are nearly 100 trillion with a T dollars in global promises to pay someone or something back in US dollars. Not yuan, not rubles, not euro, not Bitcoin, dollars. And the US controls the means of that payment on this $97 trillion. Everything from the arms trader, the cartel drug dealer, to the multinational business conglomerate owner deals in US dollar debt, and the US decides that flow. And from a baseline decides who gets it through the exchanges. Now there are underground means, which I'll talk about in a minute because that's where Russia is headed. But I cannot stress this enough. This right here might be the single most powerful tool the US has. No other empire has ever done this. It is an insurance policy to ensure the US stays strong and everyone pays into that insurance policy so they can eventually get paid in the dollars they were promised. And now Russia is cut off. So an example here to kind of break it down Barney style is if you bought a bunch of tokens at Chuck E. Cheese, you really want Chuck E. Cheese to stay in business so you can use them, right? Same thing with the dollar. America is Chuck E. Cheese and the world has our tokens. So without the centralized dollar trading platform of the Moscow Exchange, transactions will have to move to over-the-counter markets. Russia owes roughly $304 billion in official dollar-denominated debt all over the world, and that just isn't going to go away. And honestly, who knows how much dollar-denominated debt they've made promises to black market dealers. To make payments and avoid default, they now have to resort to over-the-counter trading, which involves deals made directly between two parties. This is more complex, less transparent, and more costly, as well as less regulated. Over-the-counter trades often come with higher transaction costs due to the lack of central clearing and standardization, which can increase financial and operational burdens on businesses. There's also theft, loss of savings, scams, and other issues that arise with non-standard over-the-counter trading or transactions, especially when you're having to carry it in briefcases of cash and not through an electronic transfer and a clearinghouse that the US controls. This is Russia's new reality. And the reason the Russian people are now lining up at exchanges is because their dollar investments just became more volatile. The walls keep closing in on Russia's economy.